I see Mr. Abubakar here. Good evening. Good evening, everyone.
Good evening. Yes.
You are all welcome, my fellow business owners, visionary leaders. It's nice having all of us here. Good evening. Mr. Fulu Adejumobi, good evening. Is Mr. Fulu here? Can you hear me? Mr. Fulu, okay. All right. So that won't waste much of our time because we have a lot to cover today. My name is Precious Owade. I'm the co-founder of TCP Notes. I want to congratulate everyone who is here for this powerful and impactful webinar. It's a great honor having fellow business owners and visionary leaders here. And our mission here is to ensure that everybody is impacted. And that's why we have decided to partner with our fellow accountant who is here, our certified, a seasoned accountant, a tax consultant, Mr. Kintayo Ogunyola, with years of experience and wealth of experience in tax. And he will be giving us detailed, I think I have given an outline of what we'll be covering today. And so not to waste much of our time, while we wait for others, we shall start because it's 8 p.m. so that we don't waste time of people who are here already. Mr. Akintayo, are you still here, sir? Good evening, sir.
Good evening, and thank you for having me.
Yes, it's a very great privilege having you in our midst. We want to say thank you for giving us this opportunity. And more people are joining as we go on. So, sir, over to you, sir.
Good evening, everyone. Can you see my system? Hello.
Yes.
Oh, thank you. I would like to have response so that I know that we are all following. Thank you for this privilege, TCB Notes, for bringing me on board to decode the issue of the tax that has become a challenge in the mind of business owners, who quickly run through a slide that has been prepared so that we can get ourselves educated on what we need to do in line with this current tax act. It's no longer news. Today is January 10th. There had been fear in the minds of Nigerians because of a lot of falsehood that has surveilled the tax act. A lot of people thought by January 1, they just wake up and see debit alerts being taking place on either their company's account or their business account, or as the case may be, because the falsehood in line with the new tax act makes Nigerians to be scared and afraid of what will become of their fate for being Nigerians and for being having money or doing business. Now, as our topic this evening, the 2026 tax roadmap, decoding the Nigerian tax act and why your current business structure might be outdated. Now, we have our outline, we have the introduction, we have the key policy trust for SMEs, we have the role of small and emerging business in the economy, we have the obligation of small and emerging taxpayers, we have business obligations, we have offences and penalties, key incentive, holiday exemptions, allowable deductions for minimizing tax liabilities. Then we have the conclusion. Now, that takes us to the introduction. It's no longer news that in the year 2025, a presidential committee on tax matters was set up, and they were to reform all our tax laws. And this is the very first time that Nigeria is going through a reform in tax that is so extensive in nature, and that is an encompassing one to the Nigerian tax administration. This committee, one of the major objective, is to eradicate multiplicity in taxes paid by businessmen. So I will not dwell more on individual. I'll be talking about individual, but because our focus this evening is for SMEs, small business owners, how they could do their business very well, taking to be a tax planning, other incentives, exemption, holidays, and allowable deductions. So I will be talking major focus. We deal on small businesses, and I will as well talk about people, individual and payee earners, those that are under pay employment. But I will ensure that I cover as much as possible so that we'll be carried along. This session will simplify the new tax policy, explain their effect on projects, on small businesses, on procurement, on projects, and how we can benefit. It also highlights incentives, exemptions, holidays, allowable deductions that management can use to reduce their tax liability, including VAT exemptions, capital allowance, rent-based reliefs, and sector-specific benefits. And another thing is that we know we have a lot of questions that is troubling our minds on this issue of tax refund. There will be time for questions so that we should be well informed so that we could plan ahead. Just like the addict that said, he that fails to plan has already planned to fail. And there's something that people don't so much know when it comes to the issue of taxation, and that is allowable and permissive by law, is that you can do tax planning. And when we talk about tax planning is not something you do at the end of the year of activity. It is what you do at the beginning as you commence operation from the beginning of the year. You do what we call tax planning so that you can avoid penalty, and it is allowable by law. It is not a criminal activity, it is allowable by law. So by applying these reforms and available relief correctly, our esteemed clients and people that are on this webinar can improve compliance, avoid penalties, enhance financial planning, and help management understand how the changes affect their income. Now, we have the key policy trusts for SMEs. You see, one of the things government says is that government is not coming to tax the seed, but they're going to tax the fruit. In the old tax law, the taxes that came to bear, we have 4 acts. We have the NTA, we have the Joint Tax Act. You will see them as we go on in our discussion. But the objective of government is that they are not here to tax the seed. What government want to tax is to tax the fruit. And how do we mean by the fruit? A lot of business owners were like, the government tax every money that flows into my account. No government does that, and not even Nigerian government will do that. And for small and emerging business, because in the tax law, there are 4 acts that came to be. One of the objectives of this tax reform is that they're not taxing the seed, they only tax the fruit. And when we talk about taxing the fruit, one of the acts said 50 million, the other one said 100 million. But again, this tax issue, if we're expecting perfection, then we are deceiving ourselves. Because the people that did this tax act, they are human beings. And we should expect that there will be one error or the other. And as the year continues, as implementation continues, adjustments and corrections will be made where necessary. We could hear there was a time, is it a senator or a House Federal House of Rep member saying that what was gazetted was different from what they passed into law. So these are some of the errors we're going to see in the new act. But corrections and amendments will be made. But in effect, it has come to stay. Implementation has commenced. So as I am saying, joker number 1 is that if your business status is registered as a business name and you are thinking big, I would advise professionally that you migrate your status from a business name to a limited liability company. Why am I advising in such manner? Because there are more reliefs from the business with limited liability side than that of the business name. You enjoy more relief. You enjoy more relief. One of the relief is that VAT is exempted from transaction of 100 million and below. Taxes are exempted. All you need to do is to file your returns as at when due. Now, the role of the small and emerging business in the economy. You see, one of the role is that government is expecting small and emerging business to create a job. And how would they create job when they don't have cash flow? And that is why another objective is that any VAT impute, in the old law, if you suffer any VAT, we call it VAT impute, you cannot claim it from government. But in this new tax law, if you do a business that are exempted from VAT, but eventually you suffered VAT, you have the obligation to apply and you will be refunded that VAT. Second thing is that if you suffer VAT, you can expense that VAT. In the old law, when people incurred VAT, what they do is that they add this on the cost of their product and distribute it, and the final consumer bears the brunt. But government is saying, no, don't add it to the cost of your product. You can expense it to reduce the profitability, and what will be taxed eventually. So another role of small and emerging business in the economy is that to increase and contribute to the GDP with driving innovation. There are a lot of people that want to do business because of the issue of taxes. A lot of persons are not coming out. You say, I start this business now, I bring this innovation out now, government will come and start taxing me. The another thing is innovation. Small businesses are often at the forefront of innovation, introducing new products, services, and processes that enhance competitiveness and productivity. Another role of small and emerging businesses is that local economic development. Small businesses often serve at local market, providing essential goods and services to community and contributing to local economy development. Then entrepreneurship. SMEs fosters entrepreneurship, encouraging individuals that wants to start and grow their own businesses, which can as well lead to economic empowerment and social mobility. Then diversification can help reduce dependence on a single industry or sector, promoting economic resilience and stability. That is our role. Now, understanding the tax obligation. For every small and emerging taxpayer, you have a small business that you have registered with the government. You have registered with CAC. If you have a business, you have a small idea, you have a register. The first thing is that you should register with CAC and get your RC number. Now, before January 1, 2026, there had been the issue of tax ID. Tax ID, how do I get my tax ID? This has been resolved. You can now get your tax ID by using your CA. For individuals, you can use your TIN to get your tax ID. There's a link that will be shared. We'll share it on the group WhatsApp group that was created. We'll share the link how you can generate your tax ID. Now, for companies, you can use your CAC incorporation status to generate your tax ID. Now, having getting your tax ID and you have commenced business, another thing I need to clear is that the date of your incorporation is different from the date of commencement of business. There are people, they have an idea, they register their business, and with CAC, they have their certificate, but they are yet to commence. Until you commence business, you notify the tax authority, I have commenced business. You register with them, registered on their tax portal. Then you are captured. Once you have commenced business, you have done stage 1, you have done stage 2. The stage 3 is for you to file your annual returns taxes at when due, in line with the provision of the law. For VAT, it is filed on a monthly basis, 21st or not before 21st of the preceding month. But withholding tax, 10th of the next month you file. Then for your company income tax, you file at the end after 31st December or your accounting date, 6 months. You have 6 months grace to file your returns to government. Now, permit me to say another thing. Another joker is that in Nigeria, what we run is a self-assessment. Government will not close your accounts. But what government says is that you should assess yourself. Self-assessment. You do it via your tax consultant, your auditor. You said, this is what I made in the year 2025. These are my expenditure. This is the profit I made. It is the profit that is not taxed. When these profits are taxed, you pay all tax liability as at when due. That takes us to number 4. And you comply with all tax laws and provision. I hope you are hearing me. I hope I'm being heard. Are we on the same page? Are we following?
Yes, we are hearing you.
Oh, great. I like to have feedback. Thank you so much. Now, company's obligation, the corporate tax. I talked about the self-assessment. Self-assessment filing obligation is prescribed for not later than 6 months. This applies to a company that you just incorporated. If you have commenced business, you have 6 months from your accounting year end and 18 months for incorporation for new companies. What this means is that if you incorporate your business in January 2026, 6 months after January 1, and you're already doing business, you have to file your return to government. Either 6 months or 18 months from incorporation of new business. So if you have started business, you have 6 months to go to government and say, you file what we call, you file your returns and you get a tax clearance that can enable you to operate. If you don't do that after 6 months, then you can do it 18 months from your incorporation date. Then tax incentive returns, submit to relevant tax authority in a form prescribed for the service. For these returns, there are forms you need to fill. You fill this form and submit it at the relevant tax authority. Then priority and non-priority file for both services or products in each year of assessment. Now, we have what we call the monthly filing obligation, and that is the VAT. You can file for the VAT on or before 21st of the following month. You file for your VAT. Then the third thing you need to do is keep proper book of accounts in English language and be consistent with the format prescribed. Most often time, bookkeeping has been our challenge. Even when you have a good businessman, a taxpayer that wants to help you, but you don't have good bookkeeping, you will have issues. Again, there are deductions of taxes at source. That is the withholding tax. And anytime you are deducting the withholding tax, let us use a valid tax ID for monthly returns and issuance of receipts of remittances. You should keep all these documents so that when the tax man comes, you have evidences of all these filing. Now, in the old tax law, when you file your annual returns, the taxes you pay are almost 4 or 5. But this new tax law, we pay what we call the company income tax, the CIT. We pay the miscellany, we pay education, we pay NITDA, we pay police trust fund, and others. But the new tax law say no. Company income tax for small businesses at 25%. Then we have what we call developmental levy at 4%. So all these earmarked taxes, they will share the 4% on the development levy. Now, company's obligation on VAT. You see, the VAT, on the issue of the VAT, filing, submit returns to the service without notice and whether or not an economic activity has taken place on or before 21st of the day of the following month. You see, people will say, because government say if I did not make 100 million, I will not pay tax. You have an obligation to file VAT and WHT, withholding tax. VAT is a consumption tax. We call it value added tax. Whether you make any economic activity or you don't make any economic activity, you need to file your VAT on or before the 21st day of the following month. Now, another thing this new law is doing is that they are going technologically. That's what we call VAT fiscalization system. This has been tested by 10 companies. The service, the NRS, Nigerian Revenue Services people, they will come to us and said they want to put the electronic physical system for recording and reporting on all supplies. Please don't deter them. Let them put it on our system so that they can see how you charge your VAT. It is better. You see, most often time we say we don't want to charge VAT. We don't want to charge VAT. But when you file your returns, the VAT you have refused to file, eventually you have to pay, because once you do any supply or you do any transaction, VAT is on. Is now. Permit me to clear you with another joker. VAT is not on profit. VAT is on your revenue, and it is 7.5%. It's on your turnover. VAT is a basis of your revenue. 7.5% is charged on VAT. So government will do what we call VAT fiscalization system. They will be able to monitor all your records and all your supplies to maintain accurate record of all transactions. Another thing is that please keep your records, book of account. Keep it. The law only permits you to keep this for 6 years before you can say you have destroyed it or you can no longer find it. Written notice to the service and voluntary register. Charge VAT on all taxable supply and businesses and file returns. That's our obligation. Benefit of opting to charge VAT and file returns for some companies include recovery of VAT impute taxes, build compliance culture, and grow mindset. You know, I mentioned the other time, if you suffer VAT, you can recover it. The new tax law enables you to recover it. You can recover it and you can use it to pay and clear your taxes. Any returns under this section shall provide details of consumption of taxable supply, irrespective of when return is filed. Your record for filing should be kept secured. Now, I mentioned we'll digress as well for personal income taxes. Implication for personal income taxes. For those of us that have small businesses, for all our staffs, we need to file their monthly payee. File their monthly payee on or before 10th of the following month to the relevant tax authority. Wherever you are located, wherever state you are, you need to file payee. Now, but there's a relief on the payee. In the previous old payee tax is being computed on the first 300 that an employee earns. But in this current law, an individual is taxable on 800,000. So for every staff that is earning the minimum wage or 800,000 and below, their tax is 0%. If you earn 1.2, 1.4, the first 800,000 of that 1.4 or 1.2 is taxed at a 0%. Now, the CRA, we call it consolidated relief allowance, has been replaced with what we call a rent-based relief. Government said 20% of your annual rent paid onto a maximum of 500,000, whichever is lower, will be granted as a relief for you. So as company, enable your staffs to get this relief. 20% of their rent, and it's something that is confirmable. You should be able to confirm it. You should be able to present the letter of their tenancy and what have you. 20% of what they pay annually, or to the maximum of 500,000. Like some of us that's in Abuja, the annual rate of some people is about 3 million, 2 million. So 20% of that 2 million or 500,000, whichever is lower, will be granted for them as a rent-based relief. Then there should be annual filing. After you have done your monthly filing on or before the 10th of the following month, there's what we call the annual filing, not later than the 31st January of each year, irrespective of all employee. Now, in the case of income earned from trade, business, profession, vocation, and audited financial statement or statement of account as stated to by the taxpayer. So these are the returns you need to do, even for personal income tax. Now, the objective of the Due Tax Law Act, equity and fairness. In the old tax law, there is no fairness and there's no equity. The new tax reform has come with equity and fairness. It's a progressive tax. The lower, we not even pay, and as you earn more, you pay continuously. It's a progressive tax chart, not before that the poor pay tax more than the rich. Now, simplification and efficiency of tax administration. In fact, there's an office that when you have problem with the tax man, we call it the tax board. You go there and report. You don't need to go to the tax office. They will take up your case on your behalf and ensure that they resolve it for you. Then they want the issue of competitiveness. Then adapt to changing economic condition. Then combating tax avoidance, tax evasion, then revenue generation and economic growth. I've talked on this previously. Now, I mentioned on the issue of the personal income tax. You see, this is the new tax bracket. The first 800 now, before tax is even being computed, this is the way your income is going to look like. It is your gross annual income, salaries, wages, fees, allowance, pension. Now, your gross pay, they will take out your NHF contribution. They will take out your NHIS contribution. The pension will be taken out. If you have interest on loan for owner-occupied house, that interest will be taken out. If you have life insurance premium, it will be taken out. Then the 20% of annual rent relief to the maximum of 500,000 or 20%, whichever is lower, as well will be taken out before you now have your taxable income. So if having taken all this deduction and what is left of you is 800,000, that 800,000 will not be taxed. Whatever will be taxed is anything after the 800,000, which will be taxed at 15% till 2.2 million annually, and continuously like that, based on this tax bracket and tax schedule I have on this table. Now, this is a comparison between the old law and the new law. If you earn 840 in the old law, you will pay a liability of 90,000. In the new law, it is 0 annually. In the old law, if your annual salary is 2 million, you will pay 308,000 at 15%. In the new law, you will pay 180. In the old law, if you earn 6 million annually, either for personal income or for payee, your tax is 1.232 million. In the new law, it's 870,000. So we can see that it has gradually reduced significantly, both for personal income taxes and for payee. Now, government haven't given us all these reliefs, all these allowance, all these benefits. There are offences and penalties. If government get to know that you are doing business and you failed to register, failure to register 50,000 naira in the first month in which failure occurs, 25,000,000 naira for each subsequent month. Failure to file return, 100,000 in the first month in which the failure occur, and so on and so forth. Failure to keep record in the case of a person other than a company, 10,000. In the case of a company, 50,000 naira. Failure to notify change of address, 100,000 for the first month in which failure occur, and 5,000 for each. Now, we are not here to scare you with all these penalties and charges and levies. The key point is that compliance is key. If you are a business owner, it is better you comply than pay for penalties that you can employ us to help you mitigate, give you good businesses, help you to do tax planning, help you to file as at when due, so that you have good businesses. Now, for value-added tax, failure to use fiscalization system after 30 days of notice, they will give you a notice. If you refuse to grant them an administrative access to your system and what have you, the penalty is 1 million naira. When they come to you and say, and you refuse to, it's 1 million naira. Failure to process is 200,000 plus 100% of tax due and interest and what have you. Failure to make attribution, penalty is 1 million per return file. So there are penalties for offences. The key is that you should do what? Comply. False or fictitious claim of VAT refund. If you go and claim VAT that you are not incurred, that money you are claiming, they will charge you 100% of that amount plus interest at the prevailing CBN monetary policy rate. And failure to file monthly returns. If you fail to file your monthly, it's now 100,000 in the first month and 50,000 for each subsequent month in which the failure continues. Now, deduction of WHT. A lot of us, we deduct WHT and we don't remit to government. In the old law, people can withdraw and they will not remit. But in this new law, if you deduct, please remit withholding taxes that you have taken on behalf of government. If not, if the law catches up with you, there are penalties and there are sanctions. Yeah, there are key incentives, there are holidays, there are exemptions, allowable deductions to minimize taxes. One of the beauty is that for anybody that deals with shares, tax has been taken out on the issue of shares. And if you go into agricultural and agro businesses, you have 5 years tax holiday. If you do anything agriculture, agro businesses, you have 5-year tax holiday. Now, effective tax planning is an essential component of sound financial management by understanding and leveraging the incentive exemption. Allowable deductions provide under the Nigerian evolving fiscal framework. Management can significantly reduce the company's overall tax burden while maintaining full compliance. Below are the core opportunities available, especially for small and emerging businesses, as outlined below. I've talked about under the Nigerian Tax Administration, 100 million is tax exempt. Any service into the agricultural, you have a tax holiday. VAT as well, you are exempted from turnover of VAT. So it's removed. Just comply and file returns as at when due. And on the VAT, we have the products that are exempted: pharmaceutical, food, health. Rent issues are exempted from VAT. Those are exempted from VAT. And there's capital allowance for any property plant that you incur or you buy for businesses. There are capital allowance. Now, I've talked on the issue of the rent relief for employee for PIT reform. You have the 20% rent-based relief up to 500,000, as the case may be. Now, deductible business expenses, they are allowable. Business, professional consultancy, technical services expensive, staff training costs, site operational repairs and maintenance, insurance premium, etc. These can use to lower your CIT liabilities, as the case may be. In conclusion, the Nigerian current tax reform requires businesses to understand their obligation and apply the available relief strategically. For our clients and business partners to staying informed about the corporate tax rule, VAT obligation, payee requirements, and filing deadline is essential for maintaining compliances and avoiding penalty. At the same time, company can reduce its overall tax burden by leveraging on key incentives highlighted in this presentation, such as capital allowance, VAT exemption, rent-based relief, operational expenses, turnover-based exemption for small businesses category, incentive support, improve cash flow, better project costing, and stronger financial planning. Business should conduct a comprehensive analysis of the impact of the changes on their business operations. The analysis should include a detailed evaluation of tax footprints to manage undue exposure and ensure compliance. There must be assurance that adequate documentation is in place to support related party and third-party transactions and manage exposures during a tax audit review exercise by the tax authority. By integrating these measures into your operation and ensuring management awareness through this sensitization, you will be better positioned to remain compliant, optimize tax strategies, and fully benefit from opportunities within the Nigerian's modernized tax framework. This is our presentation this evening. Thank you so much for listening. I now hand over to our moderator.
Thank you very much, sir. We really appreciate it. And I must say, I learned a lot. Basically, I learned a whole lot. And I believe people here from the audience, I believe everyone picked one or two things. And we'll also give room for questions and answers and before our experts leaves. So if you have one or two questions that you love to ask, I can see Mr. Mohammed already raising up his hand. And I want to welcome, before I start answering questions, I can see Paul Victoria here, I can see Samuel Aditoro, I can see Taiwo Osho, I can see Tony Lucy. You are all welcome. It's an honor having everyone here, business owners and visionary leaders. So now let me give room to Mr. Mohammed. Please, just 5 minutes. No, 2 minutes, please. Mr. Mohammed, please unmute yourself. Thank you.
All right, good evening, sir. Good evening, sir. Thanks for the presentation. It's very interesting. Please, I have 3 questions. Number one, let's assume maybe I work in a company. So under the work that I'm doing, I also have staff under me that I am paying for my own personal salary. So you know that the money that is coming to my salary, it will be recorded on my BVN, like when it's for me to file. So if I want to register for CAC, can I still register as an employer in another company as a limited, or I'm still going to use business name? That's number one, sir. So, and again, the second question is this: like you said, this tax are exempted, like it can be deducted for NHF, which is National Housing Fund. Let's say, as someone that don't have idea about this National Housing Fund, I don't know if you can just explain to us like how we can register so that people can be putting our money there, or how it's like so that we know how it is done. Maybe we can, so that any money we're having to take it there to save some money for us to get. Is it in form of mortgage or what? That's what I want to answer. And the third question is this: I don't know if you can assist us and help us to share this slide as well. It would be very, very, very of great importance to us. These are my 3 questions, sir.
Okay. Permit me to attend to the question the way they come, because today has been a very stressful day for me. I just came in from a journey. I might not be able to put all the questions on my head. So as they ask the question, I would like to respond. Now, okay, the slide will be shared. That there won't be an issue. We'll share the slide, no problem. Now, on the issue of mortgage fund, for people that are under an employee-based work, you work in an organization. It is the organization that set up either the mortgage fund or the NHIS or the premium for you. So it is your organization that pays those things on your behalf. So when they pay, it's a relief for you because these are your entitlements. When you get the job, they are told you they do pension. These are benefits while you work in that organization. So they say they do pension. You see, the mortgage you're talking about, it's just like the pension you enjoy. But unfortunately, it's not every organizations that do pension, that do HMO for their staff, or that do mortgage for their staff. Mortgage is if your company is giving you money or partly helping you to build a house, or they are giving you a house where you lived in, and they're making deductions from your salary for the payment of the house or the mortgage they're giving you. Do you understand? It's like an housing loan. So if that is not being deducted from your salary, such cannot be taxed. It's like, your pension is being deducted from your salary before it is being remitted. That as well will not be taxed. So that is the issue. So except you work in an organization that have a setup that will do that for you, you can't do, there's no voluntary HMO that you do. It has to be from an organization where you work. So it is the organization that will set that up for you. And you said you work in a place. That's your question one. Now you said you work in a place and you now have another people that you pay them salary. Those people you pay salary, are they under your own company? If it is a company that you have set up, a small business that you have set up, please ensure that you registered that business. If you register that business, any money you want to use to pay anything, their salary or to boost that business, open an account in the name of that business. Transfer your money that you want to use for that small business into that small business account and make all transactions from that company's account. The only thing is that it can show there all the monies you are transferring, your own personal money that you are using for that business. You can make a narration and say director's loan or director's account. It is better for, I mentioned the issue of bookkeeping. You cannot just be saying you are paying people's salary for your own personal account. It doesn't work like that. They work for you under a company. And that company you have registered is a different entity from you as a person. In the eye of the law, you, Mr. Mohammed, you are seen as a different entity from the company that you have set up. I hope you understand. You are seen as a different person from the company you set up. So if that's your company has staffs that you pay, if you want to pay any money, please send it into the company's money. Send it into the company's money so that in the eye of the law, that your company is seen as a separate individual. You, Mr. Mohammed, you are a different person in the eye of the law. Any money you want to use for any transaction on behalf of that company, send it into that company's account with the narration director's account, director's loan, which you can recoup at the point of profitability, and it is better and it's safer, and that will help you to do what we call tax planning and proper bookkeeping and accounting for your businesses. And it will even help you to check if you're actually breaking even or you're just putting money in the business. Thank you.
Thank you very much, sir. We really appreciate. We will just take Mr. Awal and Mr. Abdulkarim. Just one question, please. One question. Mr. Awal, on to you. Idris. You can unmute yourself.
Yeah, thank you very much for this wonderful presentation. My question is around the individual who owns a business. You register as a company, you have, at the end of the year, you have a gross profit. Now, if there's return earnings, maybe you've already paid tax, definitely before the return earnings. Now, if you distribute a portion of the profit before you do return earnings, is there going to be a tax on the dividend shared after you've already done your CIT, you've paid on the net profit, you decided to do return earnings, then you also pay dividends. Are you going to, is there going to be a tax, maybe PIT, on the dividend shared? That's for those that enjoy the dividend. And also, is there going to be a tax on the return earnings? Thank you.
Okay, dividend is not taxed because what you are sharing is what has already been taxed. You don't pay dividends when you have not paid tax. You pay dividends when you have paid tax. And so dividend is paid from profit after tax, not profit before tax. So if it is paid on profit after taxation, which means taxes have been paid by the company, so that dividend will not be taxed.
Good evening, everyone. I'm a PS agent. I just want to get to better understand about the staff event. Like earlier on 2 years ago, they asked us to register for the business name, which I have one of the business names to endeavor, which is a career educational talk, which I'm a teacher. So I quickly add CSC and I upload that business name. But today again, many of us agents are confused. Some of them are just they don't understand. So I just want to understand business name and which one is preferred for QS agent.
If it is about yes, just maintain your business name, please. You are not that exposed. Maintain your business name. Maintain your business name, because if you do POS business, we can always see your money that flows in and what flows out. So you are not that exposed to migrating to limited liability company. You can maintain your business name. Just ensure you keep record, please. Keep proper record.
Okay. What about this filing? This filing by January.
Now, are you registered with CAC?
Yes.
Now, you need to file your annual returns. That's what we call the annual returns. Is it FCTIRS or where? Hello, whichever the jurisdiction is to state tax office. Because you need to file your returns to the state tax office. If you're in Abuja, it's FCTIRS. If you're in Niger State, it's Niger State. If you're in Lagos, you file it to Lagos internal board of So it's not to FRS or NRS, but it's to the state tax board. That's where you file your returns.
Thank you.
You're welcome.
Okay.
As the other man dropped his question,
I'm yet to receive Mr. Karim's question. But pending his question, Mrs. Bukola, please can you unmute your mic? And I think that will be the last we'll be taking for tonight. Every other questions can be dropped in the group chat. The group chat will be opened and will be answering. Mrs. Bukola, can you unmute your mic?
Yeah, good evening.
You're welcome.
Good evening. Thank you very much for this presentation. So what I want to ask is about the personal income tax. Okay. So if you want to file our personal income tax, because now they said the company that you're working for is not going to file your tax anymore from the information I've been hearing, that you have to file it yourself.
Are you saying the payee?
Yes, the payee, yes.
No, your company still files your payee for you.
The company, okay.
The company files. That's where you say there are a lot of falsehood. So it's better you are in the right place, you get the right information that will help you and keep you abreast on the issue of the tax form. Your company still complies and file and pay as when due.
Okay, thank you very much. So the second one now is for small business owner. That's the business that have CSC. So if we want to file now, because the confusion here that I'm getting is we're talking about filing monthly and then annually. Is it when we file monthly, that is okay, what you your accounting record for the months, and then when it comes to the annual one, are you compiling all the months and then refiling it, or maybe you are just going to do that December alone? So what's the difference between the annual filing and the the monthly filing that we're going to be doing?
the annual filing is for personal income tax filing, but the monthly is for payee. You see, the rule is that if you do your payee on a monthly basis, you do before the 21st of the following month, you do for January till December. You will now collate all that you did from that January and submit it at the tax office. That is your annual filing. You know, you have been filing, you file for January in February in March, you understand? And you are paying if you need to pay. And if it is a nil return, you submit a nil return. But at the end of December, after you have done that of December, you will now submit an annual return for payee, not for company, for payee. I hope you understand. It's for payee. Yes. You will now submit all the 12 months that you have done. You will attach all of them and submit it to the tax authority. Failure to do that is 500,000 naira. So okay. Please, let's comply.
Okay,
then for the annual returns that we are saying for businesses is just once. You don't file that one on a monthly basis.
Okay, just file that one at the end of the year.
At the end, then you do your returns and file.
Okay. Thank you very much.
Now, I think I can see the question that we're expecting. Okay, he said my question is on government project. Assuming you got a project, supply some item, and the project is through individual. Who are the owners of the project? How do you manage such transaction involving direct fund transfer to project owners after funding the supply, a case of profit sharing? Well, if I get your question very well, how do you manage such transaction? You see, these one there are always issues. One of the things that's going to bail you out is that, do you have an MOU? Set up an MOU with the person that you're doing business with. And you know, if you do a government transaction, if I get your question, you were not the one that government gave that contract to directly. Maybe it was subletted to you. Now, you would have not enjoy, you won't enjoy the VAT, you won't enjoy the WHT. So when you are doing your MOU and the profit sharing, you should let them understand that the taxes that would have been your benefit, they had enjoyed it. So you should be able to bring the percentage of what they have enjoyed into what you are sharing. And you know, when you talk about profit sharing, you don't expense profit sharing. You don't expense profit sharing. You can only expense expenditures that are directly related to that project, but you don't expense profit. If you have the project costs, the project revenue, you will take out the project cost from the project revenue. Whatever is remaining is what you share. And when you are sharing, before you share, take in, if the money was sent to your own company's money, before you share profit, take cognizance of tax. Take cognizance of tax. Let a professional prepare the account for you. And the taxes that ought to be paid, let it be deducted. Whatever is left is what you should share. Don't just think there's a profit and you go ahead and share. You alone will bear the brunt of the tax in respect to that project. So before you begin to share profit, ensure that the issue of tax is taken into consideration so that the tax is paid if it's incurred taxes. Whatever is left is what you should share. So in your MOU, let it be stated that profit will be shared after taxes are paid. Don't share profit before tax. You have to share profit after taxation. Thank you.
Thank you very much, sir, Mr. Akitayo. We really appreciate it. It's a very big honor being here. And everybody should take note of that last point because he's talking from experience. Experience, and they say experience is the best teacher. So I believe everyone should take from that. Always have an agreement, whosoever you are doing business with, so that there will be clarity before every other thing is being done. Yeah, well, thank you very much, sir. Before we go, TCB Notes is here to help business owners in growth and everything. And we offer several services from CAC registration to upgrade to website design, graphic design, social media management, ads management, and the likes. TCB Notes is here to help everyone. And to also add, for tax consulting and everything, you can also reach out to us. We'll also be dropping the tax consultant's number on the group chat. You can reach out to him for more clarity, but the group will be open for questions which will be provided answers to on the group also. And for every other objections you have, you can get in touch with us. We are ready and happily ready to assist you in every opportunity we can. So thank you very much for having us. I really appreciate everyone. I can't mention everybody's name here, but thank you very much. Mr. Kitayo, thank you for coming. Really appreciate you, sir.
It's a pleasure having me around. Thank you so much.
Yes. So by now we call it a close. Thank you, everyone.